The banking and lending industry is one of the most highly regulated industries in the world, and it is for good reason. Consumers lost nearly $5.8 billion last year in fraud alone, falsely representing financial products, undisclosed fees, and so much more. Needless to say, it is important more than ever to become financially literate and know how to spot fraud or supposedly bad deals in the sea of financial services. So today, I want to share with you 2 overlooked ways to know if you're getting the best deal at your bank when applying for a home loan. Now, we've done stuff like this on the channel before, from explaining the entire home purchasing process, teaching how to go through open houses, to providing national market updates so you know what's happening in the market. So if you like stuff like that, consider subscribing. Most times, people start off on sites like this. Zillow, looking at homes. And when they start looking at homes, they find one that they like, they click on it, they look at the beautiful pictures. This one's actually in my neighborhood, beautiful home here. And then when they decide they really like it, they click on take a tour. And what they don't realize is that when they submit their information, the floodgates burst open when they submit this request, and realtors from all over start trying to convince them that they should work with them and that they can show them the house. And due to the overwhelming amount of information and calls, you end up just working with the first guy that calls you, and then that guy sends you his guy to get you pre-approved. So now you're effectively working with 2 people you know nothing about. I recently came across this article where it talks about when someone's choosing a lender, people tend to lean on their past experiences. Consumers, when selecting a lender, they relied on 5 areas. They looked at the interest rate at 76%, no or low fees and service charges at 65%, consumer services at 54%, company reputation, and then knowledgeable staff. Now here's what was interesting. For early millennials between 18 and 24, they often placed special emphasis on customer experiences. But the reality is that most of these millennials don't have hardly any experiences at all with lenders, so they relied heavily. 47% relied on their family and friends to contribute to their lender choices. 61% of consumers and 83% of high wealth consumers all considered their past experiences when deciding who they should work with. So for you, as a first-time home buyer, not having that previous experience to lean off of could be concerning if you do not know what to look for. So we're going to break this down into 2 areas of consideration: interest rate and fees, and then customer service. Now, we all know the importance of interest rates. That's why it's at the top of the list of things to consider when buyers are choosing a lender. But the second on the list at 65% was fees and service charges. These consist of things like origination fees, underwriting fees, and processing fees. And most buyers had no idea what they were paying until 2009, after the crash in 2008, when the Consumer Financial Protection Bureau required all applicants to be notified of the APR within the first 3 days of applying for a loan. APR stands for annual percentage rate. APR, and they break it down between nominal APR and an effective APR. The effective APR has been called the mathematical true interest rate for each year, which is very helpful to get a true picture of what you're going to be paying over the life of the loan. Another way to look at it is to look at interest rate and APR in 2 different ways. The interest rate is the interest you pay on the loan, and the APR is the interest rate plus the cost of the loan put together. So as long as you compare the same type and duration of the loan, you can compare the different APR percentages to know which is the better deal. For example, if we take a look and try to determine the APR, it would look like something like this. If you would consider a loan for $100 that had to be paid back in 1 month, plus a 5% interest rate. So you have a 5% interest rate, and then you have your $10 fee. Your interest rate would be the 5%, and if you were to group the $10 fee and the 5% interest together, you would get your APR. So without including the fees, you can see here that your interest rate is 5%. However, if you were to include the $10 fee, your interest rate would increase by 10%. 10% because $10 out of 100 is 10% of that $100. So if your APR in this case would actually be 15% instead of 5% for an interest rate. So you can almost guarantee that your APR will always be higher than your interest rate. Now, the closer that APR is to the actual interest rate, that means the fewer amount of fees you're going to be paying with that bank. This is very easy to use and understand when talking with the different banks. Customer service, on the other hand, is a harder one to quantify and is why we saw 47% of millennials rely on suggestions from families and friends to make a good decision. Now, this is a good place to start, but this alone isn't enough. Any good lender should be experts at explaining the process and educating you about what to expect. So here is a list of topics that they should be sharing more about with you. If they're not, you may want to consider someone that will take the time to educate you. Some of the topics you need to keep an eye out for are closing costs and what they consist of, down payment and how much you can expect to bring to closing, the documents you'll need and what they expect from you, your monthly payment and what that really consists of, and then their availability and are they available over the weekends. I decided to talk to some other realtors and see what they thought was important for buyers to know when considering a lender, and here's what they had to say.
I want them to know exactly what they can do for me in getting my loan approved. I want them to know the best program for me to get the best return for my money.
The one that's a realist with me, the one that doesn't come off as like a salesman, the one that I trust.
Communication. There we go.
I would say number one is make sure they're local. I think that's the first thing sellers are looking for.
Full transparency, going over their fees, and availability. They have to be available whenever because it's a tough market. So.
By using the APR to compare banks and getting recommendations from realtors that you trust and from family and friends, it really is a great way to start, but is only scratching the surface of buying a home. So I made this video right here explaining the entire process of buying a home, and I really mean everything, so that you know what to expect every step of the way. Guys, thanks for watching, and I look forward to seeing you in the next video.